Hi there. Very good morning and good afternoon to all of you, depending on wherever you are staying. And it's a Sunday, and I'm live at around 11:30 on this Sunday morning here in India. Would like to discuss with you a lot of things, a lot of topics. There have been results galore, so a number of results that have come up, a number of results that have been coming in for the past week or so. Uh, Three very crucial results have come in, and I'm waiting for the Kilpis results, which will be next week. But results of Reliance Industries, results of Tanla Solutions, as well as Dixon Technologies are out, and I'm going to discuss all three of them. So this is a huge, you can say, session, and I'll discuss in detail about at least Reliance and Dixon, and give a snapshot about Tanla as to what I feel lies ahead with a very good decent results that it has come out with. So three companies discussed today. Normally I discuss one or two companies, but since this is a results season, Q2 results are out, so three companies, and then we'll answer your queries also. So slightly longer session this will be. So let other people join in, let more people join in. I'm hoping that since it's a Sunday, so more people will join in pretty quickly. uh, what has been very, you can say, very good and quite conspicuous is the fact that all three results are very very decent. So it's not that the pandemic has really taken these companies by surprise, or these companies have come out with pear shaped results for Q2. I think things are normalizing pretty fast for these three companies, and I believe that two of them are in the small cap kind of a zone, and one is the largest company in the industry. So most of the people would be eagerly awaiting for these results. So I'll discuss with these. Uh, but first, here's a small disclaimer. So, first of all, a disclaimer that this is not a stock recommendation, and any position that you take on your behalf is totally on your uh, thing. And I'm not in favor or against any company that I'm talking about. So, kindly take that into perspective that whatever positions you take after having watched my video is taking on your consent only. Coming to the fact about the results, before that, I'm going to talk about the markets. So we saw that the markets gyrated a bit, tried to go up beyond 11,800, 900 levels, then declined sharply to 11,580, 560, and have settled around 11,650, 700. I think that there is a chance of a 3 to 4% downtake on the market going forward. We could be looking at a decline towards 11,200 or so. And I think around 11,200, we will see little bit of buying, and at most we could go to 10,900. So these are the better levels to really look into when you're trying to take in fresh positions and buy into very good quality businesses, consumer companies. I've always talked about it, and those will be the levels to get into. I think next 2 weeks could be difficult. In the next 2 weeks, we could be having a situation where the markets might be declining, might be very volatile going forward. So keep that in mind. Now let's discuss about the numbers. And first, I want to talk to you about Tanla, and then we'll get to the big picture about Reliance, because I want to talk to you about Reliance and Dixon in detail. Now, Tanla Solutions came out with the numbers 2 3 days back, and it produced very very good strong numbers. So the sales went up by around 20%, whereas the profit jumped many-fold. So eventually what happened was that profit went up sharply, and the EPS of the company was around 5.8 rupees for the quarter, whereas they had a negative EPS last time around. So what needs to be understood here is that The company has produced strong numbers for 2 quarters, and the accumulative EPS for the 2 quarters have been around 11%. And taking 11 rupees and taking that into consideration, I believe that the FY22 EPS, which I thought to be would be around 10 rupees, 11 rupees or so, is going to be around 24 rupees. And if even if we take a conservative estimate of 15, 16 times, we will be heading towards 380, 400 on the stock. It is currently at 325 and on circuits. I believe another 20% is available, but the stock has run up a lot. So there could be a catch here that the stock may go up about 10-15%, and then there will be strong selling. So be very careful in this stock. Yes, the numbers are good. Yes, the numbers could be good for the next 2 quarters, but it is pricing in probably whole of FY22 numbers at 330, 340 rupees. So maybe there will be another 2 3 circuits on the stock. Maybe you'll not get chance to buy it, and eventually what will happen is you'll be able to buy the stock at extremely high levels of 380, 400. So what I would suggest is kindly be more restrictive, wait for major declines in the market and in the stock to get in. The results are decent, and hopefully, if there are no, you can say, depreciation factors or other, you can say, extraordinaries, the company would continue to produce good results going forward also. But you need to be careful, buy on major declines. So that's about Tanla Solutions for the moment. The other two companies that have come out with results, and I want to talk to you about it, are Reliance Industries and Dixon Technology. Coming to Dixon Technology, now, there was a lot of talk about the pandemic. There was a lot of talk about, uh, you can say, factors that raw materials are not reaching to India from China, and they are having a lot of trouble in trying to manufacture products on time because the, you can say, the raw materials are not reaching on time, and a lot of things was happening. In the first quarter, that is in the June quarter, the stock fell on that many times. But then there was a surge, and we've seen the stock from those 5,500, 6,000 levels now go up to 9,000, 9,300. So whether the stock is expensive or not, let's discuss all that point. So what has happened in the second quarter? So in the September quarter, the sales went up by around 16.5%. So it didn't go down. Nothing of that sort happened. Sales have surged 16.5% on the back of high growth in the mobile and, you can say, LED television segment. LED lighting also performed well, but sales have increased by 16.5% and not declined. And that has led to the profits going up by 22%. Now, normally, profit going up by 22% might seem very good, but for Dixon, normally the profit growth used to be around 30 to 35%. So, on optical analysis, on first look, it looks like that the profit has declined and there's higher expenses. But you need to have an understanding that last year in the September quarter, uh, so what has happened is in the last year of September quarter, they had a tax write back of 4.17 crores. So if you take that out, then the PAT in the September last year or September FY20 quarter would have been around 38.9 crores and not around 43 crores or something like that. So what has gone on is that, sorry, 37.9 crores and not 43 crores. So what has happened is if you take that out, the profit growth over that year, so 37.9, say 38 crores have become 52, 53 crores for this quarter in this year. So the profit growth has been over 34% and not 22%. And taking that into consideration, the results are absolutely fabulous. In my opinion, this has been, probably this will be regarded as one of the worst quarters going forward. So in the next 6 8 quarters, hopefully, if there is no shutdown of the markets, you can say physically here in India, what has been happening in Europe, England, etc., that is a scare. But if that doesn't happen, I think this Diwali quarter will be huge. and the March quarter will be big as well. So going forward, I have no doubt that FY22, even if the numbers are around 100 rupees EPS, that is immaterial because of the kind of, you can say, trouble that companies have had in the first quarter, or at least in the first 4 5 months of this financial year. So let's take into account what would be the situation, what would have been the situation if things would have normalized or things would have been normal. I would say that Dixon would have come out with numbers, or Dixon would have come out with 130 to 135 rupees of EPS this year, and would have gone on to should give you an EPS of around 50% higher from there, or let's say even 40% higher from these. So 180 to 200 rupees, I think around 200 rupees EPS is possible for FY22. So if you consider an EPS of 200 rupees for FY22, and if you consider that the stock normally trades at 50 60 times, then the stock should be trading between 10 to 12,000. But since the EPS have, oh sorry, the PE have expanded, I think the stock will continue to trade between 70 to 80 times. I have no doubt that the stock should be trading between 15 to 16,000 rupees a year from now. Currently the stock is at 9,000. I think there is a good chance that 50 to 60% upside on the stock in the next 1 year is very much possible. So in my opinion, 200 rupees EPS for FY22 is what I'm looking at, considering that Dixon, and if you remember, I put up another live session in which I discussed as to what Dixon is going ahead with. So Dixon Technology is going to sell 1,000 crores of sales in, you can say, geo set top boxes. They're getting into RT-PCR sales, and they are looking at many other factors. So LED television sales have surged. So you need to understand that. So all that taking into consideration, I think 180 to 200 rupees is very much possible in FY22. The numbers are very good, and this is a conservative estimate. I won't be surprised if it surpasses 200 rupees for FY22 and goes up to 220 to 30 rupees. We have to see how numbers pan out for Diwali. It would be very interesting to see how Diwali pans out for Dixon Technology with the kind of television sales. I can vouch for it that LED television sales are surging for Dixon for this quarter. So thanks a lot, Sivateja, for your contribution. Thanks a lot, Jen, for your contribution. PI Industries, a buy on declines. 20 to 25% upside by December 2021 is possible even now, but you need to buy on declines on PI Industries. So Dixon Technology, any declines towards 8,800, 8,500 is a buy with a stop loss at 7,800 and a potential target of 12,500, and then even 15,500 to 16,000 in say 15 to 18 months. I think in 18 months time the stock should trade above 15 16,000 rupees. It is a good 2 3 year bet. One can buy on major declines. Don't buy immediately. You could have reactions anywhere because of the US elections, but on major declines, it is a buy Dixon even now. Now we come to the analysis of the big, you can say, the big one, Reliance Industries. And this is interesting because I've gone through the numbers of Reliance Industries in detail, probably for the first time in many years. And disclaimer, I'm holding Dixon, I'm holding Reliance. So that's a standard disclaimer. Uh, Say Reliance Q2 numbers. So consolidate. Let's go by consolidated numbers because people might not be able to interpret the numbers that well. So sales were down 24% at 1.16 lakh crore year on year, which is a decent comeback by Reliance from 80,000 crore in the June quarter, and it has beaten estimates, most of the estimates, by around 4 to 5%. Profit was down 15%. Now, optically, profit was down 15% at 9,567 crores versus 11,260 crores. Uh, Again, I'll discuss about why I'm saying that optically it is down, because of some exceptional. So what happened was that there was an exceptional gain of nearly 4,965 crores in September FY20, which is not here. So it was a one-time gain. If you take that out and taking care of taxes, etc., then PAT would have been under 6,300 crores last year. Or let's say if we add the same, say, extraordinary to this year's numbers, let's do that. So 4965 added to whatever that have been earned by the company this year, and you take care of the taxes, etc., then PAD would be close to something like 15,000 crores uh, for this quarter. So 9567 would have been closer to something like, you can say, 14,500 crores or so. So 9,567 would have been something like 14,550. That is an increase in, you can say, a profit of around 28-29%. So instead of a 24%, sorry, a 15% decline in profitability, I would say the profits have increased by around 24%. If we take out the extraordinary, which is a remarkable effort by Reliance Industries, considering that even in July, August, and September, many parts of India have remained shut. So most of Maharashtra, most of Gujarat, many parts of India have had strong surge in pandemic even in these times. So when you look forward, and always market is always looking forward, or taking things forward. So 2 quarters hence, I believe the numbers could be anything for the consolidated factor. And I'll tell you why, and I'll come back to this consolidated projection for the next 2 quarters later on. But first, let's look at the numbers individually. It is very essential to look at the numbers individually, and then only we can have an understanding as to how things go by. I know the session is getting longer. I'll answer your queries as well, but it is very interesting and important to understand how segments of Reliance Industry did, because it is like five or six companies in one. So Geo numbers. Let's look at Reliance Geo, and everybody wants to talk about it after what has happened with Airtel. So Geo numbers, Reliance Geo profit was up around 12.85% quarter on quarter and 185% year on year. That is the kind of surge Reliance Jio is currently having, which is again a tremendous effort to be up 12.85% even when things are very bad on the front of, you can say, opening up of shops, etc. Uh, Reliance Jio sales are up 33% year on year. ARPU is at 145.8 rupees, nearly 146 rupees, versus 140 rupees in the last quarter. So it has also gone up by around 4.5%, which is a decent effort considering that they have had an ARPU which has remained the, you can say, best in this marketplace in terms of the highest ARPUs. Yes, Airtel has managed to have an ARPU of 162, but you look at the base, because the subscribers have increased 1.8% and they have a greater subscriber base compared to Airtel. Coming to Reliance Retail. Reliance Retail sales were up 30% and EBITDA was up 86%. This is again quarter on quarter, not year on year, but quarter on quarter, the sales have surged 30%. EBITDA has surged 86%. Year on year, the sales and EBITDA have decreased up by between 20 to 25%, which is still understandable because the retail business have been hurt badly by the shutdown of the markets that has taken place. And it is still not clear as to how or when things will open up. But retail business for Reliance has come back very smartly in this quarter, and this was also not priced in by many of the analysts before. Coming to the petchem business, quarter on quarter, I'm looking at this. Petrochemicals revenue was up 17.8%, EBITDA was up 14.6%. So again, there have been an improvement, and many people talking about petchem and refinery were talking about a huge drop because of less amount of you can say oil being used by vehicles, etc., because of less movement by most of the people, because of work from home, etc. So the petchem business will not do well, and this is global. I'm talking about this is consolidated all throughout, and it has an increase. Refining business has had a revenue increase of 33% quarter on quarter. EBITDA is down by around 21%, but that is again, you can say the damage is very less compared to what has been analyzed by analyst. EBITDA margin at 4.8% versus 8.2%, and GRM were fine and robust at $5.7 per barrel compared to $6.3 per barrel last time around. So the refinery business, which was considered as the Achilles heel for Reliance Industries, did extremely well, I would say, considering the kind of situation that the oil and oil marketing companies and everything is going through, or this oil as a commodity is going through with work from home and everything, everyone sitting at home globally virtually. Oil and gas business down 30%. EBITDA loss of 194 crores versus 32 crores. So huge damage on this front. But again, this was priced in, this was taken in. So the stock is down 10-15%. I'll talk about the stock from the highs from 2300, it is down. So probably this is all priced in. Production declined to 28.3 from 29.4 crores. So yes, there has been a dip in the oil and gas business. Coming to the media business, quarter on quarter, revenue up 31.5%, EBITDA up 514%, and that can be, you can say, easily seen by the number of ads that the business channel of Reliance is getting on television, and most of their channels are getting uh, on television at the moment because people are watching more online content, etc. So the media business has surged as well. So overall, looking at the perspective, apart from the oil and gas business, most of the businesses have surged smartly, and this is what I felt when Facebook went into the deal at around 1200, 1250, 1100, I don't know, around those prices, and the stock was trading at 1200, 1250 6 months back. This was what I was looking at, or 4 5 months back, and that's where I entered. I exited at 1900, got in again. What I want to say here is that the company is set for a mega uptrend over the next 8 10 years. I'm not talking of 1 year 2 year here, and things could go up and down here and there, stock could correct, go up, but the kind of numbers that Geo is currently showing, the kind of numbers that the retail business is showing before you can say the complete opening up of the economy, things look very good on the front of Reliance Industries. I won't be surprised if we look at the stock. I won't be surprised if stock goes to 2400, 2450 in the next 2 3 months, next couple of months or so, and I won't be surprised if the stock is beyond 2600 in 6 to 9 months time, because the numbers are kicking in, and this is behaving as a consumer technology company rather than a commodity company, one has to understand. And a consumer technology company which is a leader in space, Geo is a leader, and then they have their 5G segment which they can sell globally. There are many things that they can come up with later on, and Reliance has also mentioned, and I saw that on a ticker at CNBC, that they are going to enter in the pharmaceutical space as well. So this is going to be big. Yes, 2000, 1900, very good levels to enter. Easily 15 to 20% upside in the next 6 months, maybe even more in the next 1 year. We have to look at numbers and only gauge from there. But overall, the numbers look extremely good. So consolidated numbers look extremely good. It is just that the one-time gain of last time around has meant that the numbers doesn't look good optically. So Reliance Industries is a buy around 2000 2100. Uh, Dixon is a buy around 9800, and Tanla is a buy on any declines of 20 to 30%. So these were my analysis for all three businesses. And now I am ready to answer your queries. Whatever your queries, you can shoot it to me. Again, I would like to request you that kindly use super chats and super stickers. That will help me grow the channel. That will help you ask me questions in greater detail, and I'll answer in greater detail if you ask me questions through super chat and super stickers. Aztec Life Sciences, I would say, declines should be bought into. One thing about pharma and IT, I believe it can go into consolidation and decline going forward. I think as economy opens up, pharma and IT may take a back seat, and there are other sectors that people will look in. And you have always seen that companies that currently what is happening, that sector rotation normally takes place over the last 4 or 5 years. That is what has happened. Delta Corp, ITC, both an avoid for me. HDFC AMC on declines can be bought into, but it is expensive. I like HDFC Life below 600 more than HDFC AMC. Yes, Motherson Sumi is a good 2 3 year bet. I still believe that good 50 70% upside over 3 years. Even more is possible on Motherson Sumi. I'm positive on auto ancillaries after a year, probably 1 year of pain more left, or 6 8 months of pain more left. Balkrishna, another very good stock to get into. Absolutely. Uh, Jamna Auto is a very good stock. So I have made, I think, video on Jamna Auto. You can go ahead and watch that. Declines can be bought into. Again, in all these auto ancillary, there could be a mega trend going on, or there could be a mega trend beginning from middle of next year. So all auto ancillaries, all decent auto ancillary would do well. 50% cash need to invest for 5 years. Vijay, kindly email me, and we can have a conversation on this. What I can say is that wait for any sort of declines and buy into larger and mid cap consumer companies. You'll do well in those. Thanks for your contribution. Bajaj Finance, HDFC, AMC. I think Bajaj Finance around 3000, good levels to enter. HDFC, AMC below 2000, close to 2100, 2000, good levels to enter. HAL is an avoid for me. Britannia is good. I think any levels below 33, 3200, round about that would be good levels to get into. Thanks a lot, Rajesh, for your contribution. Thanks a million. I like JK Tire more, but I think the tire space, it's better to get into pure auto ancillary plays or autos rather than looking at the tire space. Rain industries avoid for the time being. Tata Tele, sir, I think Tata Communication you're talking about. Tata Tele is an avoid. Tata Communication on declines can be bought into. Yeah, HLE Glasgow is good, but again, it has run up a lot. So major declines, then you can accumulate. SBI Life at current levels look very attractive, both HDFC Life and SBI Life. Very good stock, Pidilite. I think it can go to 1900, 2000 from these levels. Any sort of dips, get into Pidilite. It's a very good company. Avoid make money organics, avoid opto circuits for me. Page industry at current levels is a decent buy. I think it has strong support between 18 and 19,000. At these levels can be bought into. Indo count is an avoid. I think the textile space has surged little bit, has moved up, but I think this is a dead cat bounce. I think it will again go back to the same levels. Textile industry is facing a lot of trouble, so avoid it. Alkylamines on decent declines can be bought into, one of the better chemical companies that could sustain over the next 3 to 5 years. And Nestle on declines again to 16,500, 16,000, good levels to enter Nestle. Yes Bank, complete avoid. JMM Fodler around 3,000. Any declines 10 15% can be bought into, but be in GMM Fodler for a year, 2 years, no more than that. Fine Organics, very good company. Declines can be bought into, again a 2 year play. Camcon, no comments at the moment. I have to analyze and only then can tell you. I have not analyzed at the moment. Kilpest hasn't come out with the results. The results will be out next week, so I'll discuss about it once the results are out. Then we'll discuss. JB Chemicals avoid Elchem and Syngene both a buy on decent declines. Thanks a lot for your contribution. Syngene on any 4-5% decline can be accumulated. Elchem in the same manner. Thank you for your contributions. Logistics sector. So interesting. I think Blue Dart has come out with results, fantastic results, can be bought on declines and held on to. I don't like any other logistic company, Gati, etc. No. Blue Dart is the leader. Probably, if you really want to buy, Blue Dart is still relatively cheap at around 35, 3600 can be bought into. Thanks a lot for your contribution. Deepak Nitrite for short term, avoid. I think short term avoid any trading because you would be chopped out. Look at the kind of volatility in the market. So avoid anything for the next 1 month. Things could go up and down anywhere. Both ITC Federal Bank is an avoid. TCI Express, I like Blue Dart more. LT Foods declines can be bought into. Results have been good. I think for the first time it is looking like that it could go on a sustained up move again. 10-15% decline would be better to get into something like an LT Foods. All right. Lotus Labs has run up a lot, so the results were very good, but I don't know how long the results would be there. So I think it is at dangerous territory. I would say if you have not bought into, avoid the company at this point of time. It's a good company, IEX. So thanks a lot, Rajesh, for your contribution. It's a very good company, IEX. But again, probably when market falls a lot, say market goes to 11,000, 11,200, that is the time to buy into such companies like IEX. Uh, Airtel at current levels, decently priced. I still believe in 3 years' time it can double. So Airtel at these levels is very good. You can watch my videos on Airtel that I published. A lot of videos I published on Airtel live sessions. Iron Exchange, good company, declines can be bought into. Avoid any banks, IDFC first included. Avoid all kinds of banks. Probably HDFC Bank is something you can look at. HDFC AMC is a better company, SJ, than Nippon. So kindly take that into consideration. HCL Technology is good company again, but again IT may not perform that well as you're thinking. Probably next 6 months could be good, but after that I'll see consumers doing well. Thanks a lot, Tripati, for your contribution. Mazgaon Dock, decent company would give decent, you can say dividend, but I would say avoid such companies. Get into very good renowned consumer companies. They are coming at very good levels if you have 2-3 year time frame. That's my opinion. RBL Bank again, all banks is an avoid for me. Tata Consumer is at decent levels now. You need to understand that if you have a good 3 to 5 year time frame, get into Tata Consumer at current levels. Otherwise, I see a consolidation over the next 3 to 6 months in Tata Consumer in a stock like Tata Consumer. Avoid future retail. I think DMart at these levels is very attractive. Reliance at these levels very attractive. Do not get into something like a future retail or future group stocks at this point of time. Voltas is again very nicely poised for a move probably by next summer. Declines can be accumulated over the next 6 months. SBI cards current level very good to get into. So SBI cards can be bought into at current levels. All right, guys. Thanks a lot. Thank you for being online. I hope I answered many queries and probably discussion on these three companies. Please like and subscribe my channel. Kindly subscribe to my channel and support me through Patreon. Visit the Patreon website. Support me there as well. Thank you.